Hey everybody, it's your favorite mortgage pro, Jamie DeKester, JP Mortgage. Stick with me, watch the rest of this video. Huge news, really important stuff to understand and to take advantage of. If you have any questions, feel free to shoot me a text, email, whatever the case may be. Talk to you soon. Hey there, it's your favorite mortgage pro coming at you with some really important news that just came out yesterday. The FHA is lowering their monthly PMI amount on all FHA loans. Which is a huge deal. They're lowering it 30 basis points from where it currently is, which is a huge deal for FHA borrowers and actually can make some conventional clients really look at FHA because it might be better for them long term, okay? Stick with me here. I'm going to go through this real quick. If you have any questions, obviously, give me a call, shoot me a text, email, whatever, and we'll go through it. So here's the announcement. FHA is lowering their mortgage insurance premium, but what does that mean to your buyer or to you as a borrower? Okay, so let's take a look. So right now, this is where they were previous. MIP was 80 bips if you had more than 5% down. Less than 5% was at 85, which everyone said was always a really high number for a monthly mortgage insurance premium, especially since they were charging you 1.75% on the front end that was financed into the loan. So now, as you see, they've lowered those all by 30 basis points, okay? So, and just so everyone knows, if you are more than 5% down on a FHA mortgage, you don't pay the highest rate. You get five basis points off that monthly rate. And if you put 10% down, that mortgage insurance goes away after 11 years, okay? Unlike less than 5%, we can go 3.5% all the way to 10%, and that's there for the entire term of the mortgage. Which is much discounted now, but it's still there for the whole loan. But if they can put 10% down, it goes away after 11 years, which again, now it makes it really attractive because we all know FHA mortgage rates are typically much better than a conventional mortgage rate, especially if the credit scores are a little bit lower. So I'm going to go over a couple things real quick with a potential client that maybe is 700 credit score, going to put 5% down, okay? So this would be, option one is our current FHA loan, right? So let's say the purchase price is $467, loan amount is $451, including the upfront mortgage insurance premium, 6.099% for that particular scenario. The monthly payment, principal and interest, $23.75. Mortgage insurance, $314 a month. Okay. New mortgage insurance, same loan, but with the updated guidelines, $203 a month. So same exact scenario. Mortgage insurance goes down $110 a month, which is awesome for that client, right? So say, hey, we don't want to do FHA, we want to go conventional. So this is that same client in a conventional loan. $467. Loan amount is a little bit lower because there's no upfront mortgage insurance, but look at the rate. At 700 credit score, that rate is just over 7%. So their principal and interest payment is just over $3,000. Their monthly mortgage insurance is a little bit less, but look at this, the overall numbers here. Okay, first scenario, just over $3,000 a month. Updated scenario, you're saving yourselves, like I said, $110 a month. But over conventional, you're saving $250 a month over conventional mortgage. Now, this new guideline goes into effect for loans registered March 20th or later. So we got about a month before we can start locking these folks in and getting them registered to do this. The other thing to think about, buying power. So instead of saying we're going to lower your monthly, from either $250 or $110, let's take this same client and say, hey, you were looking at houses that were closer to $500,000, but it was kind of outside your price point, right, or outside your range. But now with that lower monthly mortgage insurance premium, look at this. You got $3,049, $3,052, and we just moved up their purchase power by almost $30,000 for the same payment. So this is big news. It's really awesome. Goes into effect March 20th. Let me know if you have any other questions. Another big announcement that not many people are talking about is there's been a reduction in the VA funding fees going forward as well. So a really good savings for veterans as well, because we all know that veterans loans are the best loan if you qualify for it, especially if you are exempt. But as you can see here, the new funding fee, 2.15 for first-time use with less than 5% down. And now, see, they've moved them all down by about 0.15%, so about 15 basis points for all scenarios. So it's just more affordable. Saves in a $400,000 scenario. It's saving the veteran about $600 in the upfront funding fee. So another good thing just to keep in mind, again, the FHA deal is going to be a really big deal because it might bring more people in that FHA loan. So let's get educated about FHA loans. They are a great loan. They are not a big pain. They go just as fast as everything else. The appraisal process really isn't all that different. There's a couple items that they look for different than a conventional appraisal. So give me a call. Let's talk about it and get it figured out and get your clients into some new homes. Talk to you soon. You have a great day.